Hello, good evening. It's Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Tuesday, the 17th of March. Happy St. Patrick's Day for those of you that can get out. Once again, this is the S&P 500 chart using the futures, which to me is the most authoritative way to look at this index because this is the instrument that is traded nearly 24 hours a day. So we get the pre-market action, we get the tests, we get the hit traded action, we get everything with this index. It's one of the most liquid products in the world right now, and certainly one of the most watched. And unfortunately for those of us that trade crypto, it is operating as sort of the anchor. It's kind of the North Star. Everything is correlated to, well, not everything, but all risk assets are correlated to the S&P 500. So today, nice little rally today, and that was good. And actually, what was even more important was, let's look at this on a 5-minute chart basis. We had an early gap fill and retest of the recent lows from this week, just yesterday actually. Retested the lows, that's good, and then a rally right off of that. Kind of a weak close, though. I was not impressed by the close. And what this means is that more than likely, we are going to see a little bit more histrionics into the next week or so before we finally get some type of a bottoming formation. What that means is that we may get more of this sort of pogo stick action before we finally get the price to release up to some form of a fib. I would say 50% is a good target for this, and then I think we'll roll over again, and who knows where we're going to be in the next year or so. We just have to take this one step at a time. So what I think is, in the short term with respect to crypto, we are going to get an opportunity to take a ride on this whale, on this monster, because once this lifts off, at least from the bottom, it is going to be risk on party for all these cheap assets that have been beat up over the last month or so, including cryptocurrencies. We saw a little bit of that today. I mean, Bitcoin itself is up 8.2%, which is much more than the S&P was up. The S&P was only up just, let's see, today was up about 3%. So Bitcoin is doing a nice job of consolidating. Right now, if I were to look at this, I would say, ooh, kind of looks like a bear flag. But these can tend to go in any direction, right? This is more of a triangle formation. Triangle formations do not have to escape the formation in the same direction that they came in. Sometimes what we can also see is the price will break lower from this temporarily, print a higher low, and then take off again. Remember, this is going to follow the S&P with respect to risk assets. So if we crash again, Bitcoin is going to go plumbing down into the 3,000s again. Otherwise, we'll see this thing piggyback on the S&P in the near future. I thought it'd be kind of fun to look at the expected move going forward into the next month. So let's look at the back month options out here in Deribit. And this is the 24 April options. And right now, with our current price at 5,400-ish, we're going to be using the 5,500 strike. So let's go ahead and lock this in. Lock in this row, and let's add up what the at-the-money straddle would be. So I'm just going to do this in my head here. We've got approximately, let's just say, for grids, I'm just going to ballpark this at 900, somewhere in the midpoint here. And then we've got 987 versus 1041. Let's just say 1010 here. All right, so we have, if we add the two together, we have an expected move of about 1910. Let's just say 1900 points. 1900 points. Plus and minus. That is our expected move. So let's go back over to the chart and map out the probability cone for BTC going forward in 37 days. Okay, so what I've done is I've gone ahead and drawn the expiration line for 24th of April. And if we take 5,400 plus 1,900, we're going to get about 7,300. So 7,300 is going to be the upper end of our expected move into April. And then 3,500 is going to be the lower end of the expected move. So I'm actually going to drop this down just a little bit further. Okay, so what I need to do now is let's go get a geometric shape. Let's go get an arc. And I'm going to start this one from 7,300, which is going to be right around there, down to 3,500, which is going to be right around there. And we're going to push this out. Okay, so there we go. And it's, it's just roughly around in that area. We have a little bit of skew on the curve right now, but that is the expected move. And so what we have is from now until the middle or the end of, this is the 24th of April, we have a 68.2% chance of the price being somewhere in this area. And if we can get a beat on a trend, if we start to trend to the upside, then it's going to favor more of this side than that side. Otherwise, if we continue leaking down, we're going to favor this side. This is one of the problems with setting up a straddle for here. So a lot of people want to set up a straddle right now, which is a directionless trade. You can win in either direction with a straddle. But the problem is, if you want to set up a straddle into April like this, the price has got to go beyond the range of the expected move for you to profit. That's the trouble, because right now with this drop down here, implied volatility has just gone sky high. Well, on a relative basis, Bitcoin volatility has been very, very mild compared to what we're seeing in the US indices right now. If we look at, I don't know if I can even chart this, but the VIX right now is just inches away from all-time highs. And this is the volatility index of the S&P 500. And this directly correlates to the amount of implied volatility that's on all the option chains. So think of it this way, think of it like a balloon, and you've blown up a balloon to the very limits of the amount of air that it can hold. And imagine all that air coming out. So this is a good time to sell to the downside if you want to. If we look over at, at Bitcoin right now, we're missing a lot of strikes, but you can sell outside of the expected move and still pick up about $100, $140, $150 for selling a put down there for the notional value of one Bitcoin at $3,000. It's not bad for being paid for a pullback down to 3,000 or 3,500, which is right at the expected move. You get paid about $220, $230 for that. This is typically the time where I will sell puts I've been selling puts on the S&P lately into this move down way below support levels. And this is generally, it doesn't feel very good to do something like this, but generally it's some of the easiest money as long as you don't start from the very top of the selling. Then you're going to be underwater very quickly. All right, folks, that is it for today's report. Thanks for listening. We'll see you tomorrow.